But I think we are at the kind of the last chance bar and grill for growing our way out of this, and it's got to include we reinstate the 2017 the Tax Cuts and Job Act with pay-fors. So I think we can tame this. The Green New Deal, we probably save $1 trillion over 10 years on that. I think there's probably something to do on Medicaid in terms of empowering states, no cuts. I think on discretionary spending, we probably need to do some kind of a freeze except for defense. And I think the market will respond to that.
Welcome to the first episode of On the Edge. We kick things off with Trump Treasury Secretary nominee Scott Bessent telling the Manhattan Institute in June that if he were in charge, he would limit spending, but not defense spending. So Bessent is sounding like a moderate fiscal hawk here, certainly when it comes to defense. That is probably one reason why he was not Elon Musk's first pick for the Treasury. Elon, of course, is heading up DOGE, the Department of Government Efficiency, and he has said he wants to cut trillions of dollars in government spending. Bessent probably believes that massive cuts would risk a recession, and he wants the U.S. to grow out of its debt problem. That likely means targeting a mix of real growth and inflation to get the deficit to GDP number down. Oh Lord, give me fiscal chastity and continence, but not in defense. Gold investors, sounds like everything is probably going to be all right. And with that in mind, let's head to the gold group and look at Torex Gold, which entered the Inc. Canadian Insider Index on Friday, November 15th. You can see from the Inc. company page why Torex has a sunny outlook, putting it in the top 10% of all stocks ranked. Gets there because it is ranking well in all three VIP criteria of valuations, insider commitment, and price momentum. We highlighted Torex Gold along with BC Focus Artemis Gold for Inc. members back on January 26, and Torex Gold has more than doubled since that report. So something to keep in mind the next time you hear someone saying you can't make money in gold stocks. We returned to Torex Gold in the morning report on Monday and touched on some of the latest company news. On October 30th, the company provided an update on its Media Luna underground mine project, which is connected by a conveyor belt to the ELG processing plant located about 7 kilometers away. Due to the news of some equipment delays, the company delayed the start of the plant tie-in period from November to February 2025. However, the tie-in period has the benefit of allowing increased plant production in 2024. That allowed the company to boost operational guidance for 2024 to midpoint 470,000 gold equivalent ounces from 435,000 ounces. Moreover, the company has indicated it can do advanced testing on key processing plant systems, thereby potentially reducing the time required to complete the tie-ins and upgrades to less than the originally planned 4 weeks. Management appears to be making the best of the equipment delay. These curveballs often arise in mining, and the test is how management deals with them. In this case, Torex management appears to be making the most out of things. For more on Torex, please check out the November 25th Morning Inc. report. Natural gas has been gaining attention as prices rise on the prospect of faster LNG export facility permitting under a Trump administration and falling European natural gas storage. That brings us to Tenaz Energy, which also entered the Inc. Canadian Insider Index in the November quarterly rebalancing. You can see that it too has a sunny Inc. Edge outlook, placing it in the top 10% of all stocks ranked. Inc. valuation rankings are on a trailing basis, and on that basis, Tenaz is relatively expensive, but there is more than compensating that by high insider commitment and strong price momentum, which indicates both the insiders and the broad market are betting on strong growth for Tenaz. We covered the stock in our July 24th morning report. At the time, Tenaz announced it was acquiring NOBV, which is a Shell ExxonMobil JV focused on Dutch North Sea natural gas. The deal has an effective date of January 1st, 2024, and is expected to close by mid-2025. It would have a big impact on the company's production. Tenaz currently produces about 2,500 BOE per day, and on a 2024 pro forma basis, it would produce about 13,800 barrels of oil equivalent per day, with most of that coming from the Dutch assets, and would generate an estimated 140 million free cash flow. The free cash flow source mix would be 91% Dutch transfer title facility gas and 8% midstream. Speaking at the Enercom 2024 conference, CEO Anthony Marino explains why Tenaz is looking abroad for deal targets.
Today, we see just a higher return opportunity internationally. There's two steps to this. The first is that there is less competition on these base acquisitions. There just aren't that many well-funded teams that have the operating expertise, even the ESG expertise, to be accepted in these jurisdictions. We typically, in the projects we work on, we might go against no competitors, completely negotiated deal, or maybe one or two competitors, and that's really key to getting a good low multiple at entry, a good base level rate of return to go against very little competitors, because it holds down the consideration that is needed to be paid. The second element is also very important. In the overseas market, we feel from our experience for a long period of time working both North America and overseas, that there's a greater opportunity for operational improvement in these assets that we would be acquiring.
Let's now do an ink spot here on Wealth Manager CI Financial. We have covered insider buying at CI Financial stock twice in our morning reports in 2024. We also highlighted the stock in the November Inc. Top 40, which was titled Financials Muscle into Prominence. 4 days later, the company received a $32 cash per share going private offer from alternative asset manager Mubadala Capital, a subsidiary of a US $302 billion sovereign investor headquartered in Abu Dhabi, United Arab Emirates. That is a $4.7 billion Canadian equity investment. Congratulations to Bill Holland and all the longtime builders and believers at CI Financial. Meanwhile, as this BRICS investor is making a big bet in Canada, the Canada Pension Plan seems to prefer to invest outside of Canada in a big way. In fact, if you look at their November 15th press release, they have reported on more than 30 investments, and only one appears to be in Canada, and that appears to be a global AI fund, which can also invest globally. Now, I hear often that CPP needs to go internationally to find the best returns. I will just note for the period ended September 30th, 2024, that the reported 5-year annualized return for the base CPP was 8%, based on a strategy that includes more than 30% of the fund being allocated to foreign private equity and debt. Meanwhile, the Inc. Canadian Insider Index, which is focused on Canadian public market companies, returned 18.6% on an annualized total return basis, a 10% difference. Now, does CPP really need to invest so much money in foreign, private, and typically illiquid assets? What do you think? Let us know in the comments. Well, that is it for the first edition of On the Edge. If you got something out of this video, please give it a thumbs up and leave us your comments and feedback. If you would like me to cover a particular stock in the next episode, let me know and ask a question in Inc. Chat, which is open to Inc. and Canadian Insider Club members. If you're not a member, join us for access to our research and data via incresearch.com, canadianinsider.com, or insidertracking.com. Well, thanks for watching, and check out the description for some helpful links associated with this video and links to our website tutorial.